Hello and thank you for joining me today. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. Today we're going to go over a quick little Q&A session, some of the more frequent questions we've been getting over the last few months, topics that are on top of people's minds like inflation, interest rates, how they're affecting the pension calculations and things like that. Just want to remind everybody this is a more general Q&A session, so if you have any specific questions on your company plans or need to look at a review, simply give us a call at 1-800-900-5867. We'll be happy to dig into that. But remember, the Retirement Group, we are an independent financial advisory firm that focuses on working with corporate employees and helping them transition into retirement. We've been doing this for right around 30 years or so. We work with a select number of companies, and that gives our advisors an ability to have a deeper understanding of your specific company plans, whether it be the pension plan, the 401k, retiree medical options, things like that. So we can essentially hold your hand in that transition process to make sure you pick the right day to retire so you maximize your benefits from your company and avoid a lot of common mistakes we see. And that leads to obviously the next steps as far as investment strategies and retirement planning and tax strategies, which we can get into on a one-on-one basis. Now keep in mind we do a lot of work with companies, but by no means are we endorsed by or affiliated with those individual companies. We do work all across the nation, so we've got offices throughout the United States. So if you still need to sit down with somebody face-to-face, that can still probably be accommodated. But obviously in these certain times, we can actually do a lot of meetings via webinars, phone calls, email, fax, all that's available as well. And at the end of the day, if there's anything you take us up on, it's our complimentary cash flow analysis. And if it's been more than 6 months or more than a year since you've done one, it's probably good to get an update on that because the items we're going to talk about today, like the interest rates and the market shifting over the last 6 months, could have changed some of those plans as well. But that's it's a written plan where if you spend about maybe 10 minutes with us, we can gather some data, information like what do you think you need to spend in retirement. We can help you on the budget if you need that. And then looking at what you've saved so far, what your retirement date, your projection is. We can look at various retirement dates to give you different options and help you determine the best date and the best manner to take your pension if you have a pension and what the different options are for your 401k as well. So those are all complimentary services. But let's go through a couple of different questions that we've been getting more recently, or at least kind of a combination of some questions. And one of the biggest ones obviously on everybody's mind is interest rates. So let's see. I was prepared to retire next month, but with inflation and interest rates continue to rise, I am thinking about pushing it back to next year. Am I being irrational? Well, that's all going to depend. I mentioned before that cash flow analysis, it's really good to kind of run those numbers for each individual person because for most of us, that's not irrational because there's uncertainty ahead. You're concerned about the skyrocketing price of things, even with inflation potentially leveling off. It's still getting expensive. We've seen this grow over the last 8 months or so. Roughly, we knew inflation was coming. It's just a matter of when it would come, and it's come a little bit more rapidly than some may have expected. And so what that's doing is that's creating uncertainty as far as how much things are going to cost, what life looks like for you. So if you're thinking about retiring and you're saying, okay, I'm uncertain about things, I just want to continue to work, pad my numbers, then that's definitely not irrational. However, again, it depends upon what your company plans are, but it's important to give us a call to look at the situation because that inflation and the interest rates go hand in hand with a lot of the lump sum calculations we're seeing people take on their pension. So what that happens is if you have a pension plan with a formula-based annuity and you want to convert that to a lump sum, they use the interest rates. And every company's different. Some companies update them once a month, some once per year, most once per quarter. But those interest rates going up are driving down the lump sums, the most drastic drops we've ever seen in the history of pension plan lump sum calculations as well. So if you wanted to hold on for another year, you might actually be doing yourself a disservice if you're taking a lump sum and losing money on that. So again, this is really kind of a one-on-one review where we can dig into the numbers and let you know. But generally speaking, no, it's not irrational to focus on safety and look at continuing to work and make money versus retiring and spending money. But again, that cash flow analysis, we can run that side by side, what it means to retire this year versus if you held on for another year or two, how that affects you in the long run, not just now, but in 10, 20, 30 years from now. So again, give us a call. We'll go through that with you one-on-one. So another question, kind of piggybacking the inflation we talked about, how are inflation and interest rates related to each other? Should that determine how I invest? Let me go back to the previous question. I talked about the inflation and the interest rates for lump sum calculations. So generally speaking, inflation is kind of a leading indicator before interest rates move up with it. We obviously saw prices of everything getting more expensive last summer through the fall, so we all knew inflation was here, but the CPI numbers were trailing. We didn't get those till later. And at that same time, we started to see interest rates rise on bonds, interest rates rise on the segment rates that are used to calculate pension lump sums as well. So they're a fairly direct correlation. There's just a little bit of a timing issue between the actual prices being more expensive before you start to see the CPI updated with that, and then interest rates updated with that as well. So what that does is we've seen, year to date, the bond market taking a pretty big hit because that's driven up interest rates, and when interest rates go up, bond prices go down. So a quick example, let's assume that a municipality or a company wanted to build something, and they issued bonds, maybe let's say 3 years ago, and they were paying 4% rate on those bonds. But now, if they wanted to do the same thing, they might have to pay you 6%. So nobody wants that 4% bond. They want that 6% bond. So if you have to sell that 4%, it's gonna go at a discount. So that's why we've seen the bond prices drop dramatically here year to date. But again, this is something that as those, if you're looking at bond mutual funds within your 401k, as those rates kind of move up and trickle in, you'll start to see the rebound on those as well, because you'll have higher rates across the board as those bonds mature and get reinvested. But as far as how should you invest with interest rates, again, some of that's a little bit behind us. This is stuff that we were talking about back in the fall and late last year, leading into the inflationary pressure. But obviously, we want to look at getting shorter on the yield curve on the bond side. Maybe look at Treasury inflation protected securities. And then on the stock side, it depends upon the different options there. But we have a heavy focus on value companies. And you want to look at commodities and other items that would weather the storm. But again, a lot of that is, I'm not going to say potentially behind us, but we're already kind of in the midst of this inflation. So a lot of that, a lot of the benefits of those have been sort of baked in a little bit. So question 3, and I guess maybe I went a little bit ahead. What investment funds in the 401k do well in a high inflation environment? So I was kind of alluding to some of this, but like I said before, every company is different that we work with. We've got companies that have 401k plans as simple as only 6 or 7 investment choices, to others that have over 100 investment choices. So obviously the ones with more investment choices give you more flexibility as far as how to invest. Now also, a lot of companies, they give you, once you retire, you're able to roll your 401k over to an IRA, and then you've got thousands of choices. So there's obviously a lot more options available to you, and that's where we can come to play and help you out with that management side of things. Also, if you're an employee, there may be a partial rollover option for you in your 401k. Usually once you cross 59.5, you can roll over most of it or a chunk of that to an IRA if you want more flexibility and more choices. But even if you're under, there may be partial withdrawals. So you have to give us a call or call the company to kind of dig into what those options are. But as far as your personal 401k, like I said, depends upon the choices. But if you've got a lot of choices, then going back to what I said before on the bond side, maybe staying lower on the yield curve, initially looking at Treasury inflation protected securities. However, some of those interest rates have already come through, so it may make sense to look at going back to a more diversified bond approach for those rates to trickle in. On the stock side, again, the retirement group, you can always go and pull up one of our value webinars, because we have a strong, heavy focus on value. It's consistently outperformed growth over the years, with the exception of recently, because interest rates have been so low and it's been easy for growth companies to borrow money, and that's obviously changing with higher interest rates right now. So value companies are companies that tend to be more stable. They've got cash on hand, they pay dividends, so they can weather the storm a little bit better, and they reimburse you versus turning around and trying to constantly invest in that company, whether it makes sense or not. Then there's also commodities, obviously, on that side. But ultimately speaking, there's different sectors you can look at. But again, I'm not going to get into a lot of details, because the 401ks usually don't give you sector fund options. But if you have questions on your specific 401k plan, just give us a call. We can dig into, let you know what your investment choices are. We can run an asset allocation to see where you are now, look at how that could potentially perform in the future, and what suggested changes we would suggest either within the 401k plan, or if you have the IRA option, what those benefits would be, and compare those side by side for you. So there's just some of the questions we've been getting. Obviously, the easiest way is if you have a question, call us at 1-800-900-5867. We'll be happy to answer those questions, or set up a time to go into more detail and go through that cash flow analysis we talked about before. But also, if you've got a camera, excuse me, not a camera, but a cell phone, you can hold up to that QR code. And if you want to follow us on LinkedIn, or set up a meeting with one of our advisors, we can go through that route as well and that way on LinkedIn we can get you more company specific information. But at the end of the day, again, I just want to remind everybody that we work with a lot of different companies, and we've been working with many of them for close to 30 years. So we have a deep understanding of your benefits, which is really the best way to review a lot of these questions, figure out how it applies to you personally, run that cash flow analysis to see where you stand. But again, like I said before, we've worked extensively with your company probably, but we are not endorsed by nor are we affiliated with them. So again, at the end of the day, I want to thank everybody for joining us here. And if you have any questions, you can reach that info@theretirementgroup.com or call us at 1-800-900-5867. Thank you very much. We hope you have a great day.